Time for Ask Annex. As always, get a question for us. You head to our website, annexwealth.com. You look for the Ask tab. Matt Morzy, investment team manager, is in the studio. Welcome.
Hey, Danny.
And we got Fred Coleman, CFP and a wealth manager at Annex Wealth Management. Welcome to you.
Thanks for having me.
First question on Ask Annex today. My grandfather bought a $1,000 life insurance policy in 1951. My parents are surrendering it for $6,500. They think that's good. I disagree. I'm trying to tell them that even at extremely conservative 5% interest, if they had just invested $25 premium each year, it would be over $15,000 instead of $6,500. At a more reasonable 10% interest, it would be over $225,000. Am I correct?
Yeah, I mean, hindsight is always 20/20, right? But when it comes to life insurance, the first thing is it has its own purpose, and that's to cover your life if, for whatever reason, you were to pass away. So from that perspective, it probably made sense back in 1951 to get that life insurance policy. And the investment side is really secondary. Now, when your grandparents took that policy out 70 years ago, I'm sure that was their thinking. With that being said, it's important to continuously reevaluate your life insurance policies every year to see, does this policy still make sense? Because I had to run the numbers myself. And when you compound $25 over 70 years, those numbers are very similar. And I couldn't believe it myself. I actually had to bring in another wealth manager who's actually studying for their CFP. I'm like, do you see these numbers? Like $25 over 70 years, and those numbers are really close to what you're saying. So yes, the $25 compounded over 70 years, would have been similar to what you got.
Yeah, I think Einstein said compounding interest is like the eighth wonder of the world. It is just so impactful to have that continuous saving, having a positive rate of return over time. The effects really are gigantic.
It was sobering for me. 1951 was 70 years ago. That was crazy. Second question on Ask Annex. Could you please explain fractional shares and how they might work? Is this a fad?
Yeah, I don't think so. And just to take a step back, fractional shares really essentially are just not whole number shares. So typically from a stock perspective or ETFs, you buy in whole numbers. You buy 10 shares of something, 20 shares of something. What fractional shares is gives you ability to buy 10 and a half shares. And where that doesn't sound like that much, it's really from a simplicity or an efficiency standpoint of why that's coming out. Mutual funds already trade this way. When you buy or sell a mutual fund, you generally are buying $10,000 worth of $20,000 of that mutual fund. At the end of the day, the pricing comes through and you get $10,000 divided by whatever that share price is, and you get the fractional shares included on that. Stocks don't trade that way now for the most part. Some custodians do have the ability to do that, primarily on the retail investor side where they can invest $100 or $500 and get whatever that approximate number of shares is at that time. I do think this is going to be coming in. This is going to become more mainstream because it really just is a more efficient way to invest. It really does allow people to really just say, I want to invest $10,000 again and just get the number of shares versus having to do that math and having some weird number put in there as a whole number and having some money left over. So, yeah, I don't think it's a fad. I think it's here and it's going to start expanding.
Yeah, and I think it's always great when you can get more people to be able to invest that may not, have the funds to buy a whole share. I love it anytime you can get more people involved in investing. So.
Next up on Ask Annex, my kids are 8 and newborn. They'll most likely not be in college at the same time. So do I have 2 separate state 529s for them or just use one and try to replenish, not use it all for the oldest, and then try to pay the little one in cash?
Yeah, great question. So you should open one in each of the kids' names. And the first reason is because each beneficiary that you have will qualify for additional tax deduction. So that's one of the main benefits of 529s. Outside of being able to use the funds tax-free for qualified educational expenses, you get that tax deduction for you contributing to the 529. The second reason is the investments should be different. Mm-hmm. The 8-year-old, as he gets closer to college, you'll want to decrease the risk because they'll need to use the funds for books, tuitions, and things along those lines, whereas the younger child will have much more time, so you can be a little more aggressive with the investments. And once the oldest is done, you can always pass that other 529 down to the youngest.
Yeah, I think you're spot on from that, and especially from an investment point of view, you really are going to have 2 different risk tolerances. Now, today, with such a long time between now and college, maybe they're really similar. For instance, we have a 9-year-old. We're as aggressive as we could be for that 9-year-old. We have a younger child as well, not as big of an age gap, but they have the same risk tolerance right now for our 2 kids. But in a couple of years, we're going to start to scale that that down for our son as we do get closer and closer to when he needs that money for college. And you're, especially with that big of an age gap, when that kid, the oldest one is 18, you're going to want to be ultra conservative with that money because you're going to be drawing money out of it. And your other one is going to be 10. And that you're still probably going to want to be pretty aggressive with. So you really do want to probably make sure that you have 2 accounts that you can manage differently to them. But also then from a standpoint of how do you want to provide from those, you could really make that decision with a little bit more customization with having 2 accounts.
You think your wild man 9-year-old is going to make college?
I'm certainly hoping so. I'm certainly hoping so.
Matt Morzy is the CFP and investment team manager at Annex Wealth Management. Thank you.
Thank you.
Fred Coleman, CFP and a wealth manager at Annex Wealth